This is Don DeBartolo, a senior commodities broker and market strategist with Daniels Trading in Chicago. I'm also the trader behind the Trade Spotlight advisory service. Trade Spotlight's broken into three segments: Trade Spotlight Futures, Trade Spotlight Commodity Options, and Trade Spotlight Spreads. It all falls under one advisory though, and this is Beyond the Spotlight, a video that will spotlight two or three markets that may become trading opportunities for this week. This week begins with Monday, May 4th, 2020. Please pause the video and read the disclosures so that you understand the risks involved with futures and commodity options trading. Quick look at what the advisory service looks like. It's sent to you to your email address directly. You get a timestamp when the recommendation is sent out, a write-up of the trade so you know the logic behind the setup, the precise entry and exit orders so you know risk-reward parameters. This goes for futures, spreads, or commodity options. Any pertinent information like margin requirements or option expiration days, and a chart that you can expand to take a look at the recommendation. Okay, let's jump right into the three charts that I want to look at for today. It's actually the same three charts as last week's video. I stayed in the currencies. I just want to review the three charts that I spoke about for potential trading opportunities, and actually one already set up, and we're in that position. So the first one though is the June 2020 dollar index. Okay, this contract remains within its channel formation. When we looked at it last week, it was still trading within the channel, trading up near the top, and we started to roll over. You can see the market's trading right on a 20-day moving average at this time. The MACD indicator, a trend indicator, is flat. The momentum is down in this market. This is my stochastic indicator. So potentially the market can get down to at least this 50-day moving average at 99.317. But we had this big trading range here, and a 50% Fibonacci retracement puts it at 99.20, sort of the middle of this channel. So we're just looking for any direction out of the dollar index, whether it's going to break out above the channel or below the channel. Going to want to be buying or selling, whichever way the market decides it wants to break out. Moving along to the next chart, the June 2020 euro currency. Last week spoke about the inverted head and shoulders that you see here and the trend line that I drew off, and looking for a break above this trend line, which occurred. Set up a bull call spread strategy in this market, and that was filled. That was done on the 28th of April. Went long the 109.50 call. That's this horizontal line here. And sold the 111.50 call that is up in here. Bought the spread for 40 points or $500. So that's a maximum risk on this trade. Can't lose more than the premium you paid plus commissions and fees. The maximum reward potential is limited to the difference of the strike prices minus your commissions and fees. The cap is $1,875. So you can see great breakout range or bar here where it actually traded above the first strike price, and then there was follow through on Friday, and we even closed, well, we traded above the 50-day moving average and we closed just underneath it. So looking for a continuation Monday. The momentum is up strong in this market, and the trend is getting ready to flip over. So I hope you watched the video and took advantage of the breakout in the euro currency. Looking for the market to trade up to this 111.5, 112 price level. That could potentially be a resistance level, especially with the 200-day moving average up at a 111.73. And the last chart is June 2020 Canadian dollar. Spoke about this last week as well. A 1, 2, 3 bottom formation. So this is actually a trend reversal formation. We'd be looking for a breakout above this number 2 point. But as you can see, the number 2 point was not taken out. So that high that I have an ellipse over, the number 2 point is 72 24.5 from April 13th. The high on Thursday, the 30th, was 72.20.5. So just missed it by 3 ticks. And then it started to roll over down to this lower trend line. The momentum is hooked down as well. Right now the trend is relatively flat, as this market has been somewhat range bound in this area, but there's a potential to actually go short this market. A close below this trend line on Monday could trigger that entry, and then definitely a break below this low, the number 3 point, which is 70.12.5 or 70.12 from April 21st. Though be careful, the market could trade down to this level and not take out that low and head back higher. So would put a relatively tight stop loss on it and trail it. If it doesn't take out this low, maybe look to get out of the position. But the market could sell off into this area here, setting up a better number 3 point. That's certainly in the realm of possibility. And I think a stronger case in the market coming down to this low and halting right there. If you have any questions about the charts I discussed today, or just the markets in general, especially during these crazy times in the markets, feel free to reach out. You can reach me by local, international, cell, which you can text as well, or toll free. You can always email me at tradespotlight@danielstrading.com. If you're not following the Trade Spotlight advisory, I encourage you to do so. Just go to the Daniels Trading webpage, click on advisories, and under technical analysis, you'll find the Trade Spotlight. You can see it right up some previous posts, and click the orange button to subscribe. It's free to clients of mine. Otherwise, I offer a free trial for 90 days. Thank you for taking the time listening. Hope there's some good trade setups that you picked up on and that will develop for this week. I hope you, your family, and friends are all safe and happy trading.